What if I told you you could get a copy of the EdgeFinder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of EdgeFinder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the EdgeFinder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content.
Good morning, everybody. Welcome back. Hope you're all doing well. Happy Tuesday or Thursday to you. Stocks are a little bit flat here today. Really, kind of the quietest overnight I feel like we've had in a while. We didn't really get too much volatility in either direction. With the whole ceasefire thing, it doesn't seem like we've had any further developments there, at least not on a big scale. S&P 500's down just a little bit. The Nasdaq is flat. Dow Jones down just a tad bit. Same with the Russell. International indices, however, pulling back a little bit more. You've got the DAX lower here this morning. The FTSE down a little bit. Nikkei cooling off here. Obviously, you had that really big move yesterday on the Nikkei. It was up 5.5% or so. Really, really outsized move there. And then, of course, the pullback as well in Chinese stocks. We also have not much of a pullback, but a little bit of softness there. The yen is a little bit soft here today. Dollar index unchanged. Volatility index a little bit higher here today, 21.21. So really nothing crazy there. But the big mover this morning is actually oil. Oil is staging a bit of a recovery move. And we'll have to see what happens with oil the rest of this week. It's challenging because while, yes, you may have this temporary ceasefire, there is still very real disruption that has gone on to the oil supply lines, to some of the infrastructure, some of the actual ability. Still, there's some time that will take place, even if the strait remains open, for things to return to normal, right? So oil at 99, I mean, we're still at an elevated oil price. Like, let's understand that this is still right around where we were, guys, at the beginning of all of this, right? We haven't seen, if things were truly de-escalated right now, you would definitely see oil price probably back down below 90, I would say, below 80, somewhere in the 80s, I would say would be kind of a normal spot I would expect oil to be at if you think de-escalation is going to continue. So we'll see. Hi, Nick. I heard a Fed official mention the phrase stagflationary recession. What is it, and how would it show on the EdgeFinder? So that's a good question. Stagflation is the idea that you have low growth and sticky inflation. And it would show up in the EdgeFinder because EdgeFinder just tracks all the major macroeconomic data points. So that would look like economic growth deteriorating, right? Simultaneously, inflation staying sticky or high, and the jobs market hurting as well. That would probably be, that's sort of the stagflation dynamic. Hold on, guys. I got to let my cat out the door. So that's the stagflation dynamic concerns. We'll see if that takes place. I think if you do, the biggest risk for that dynamic to actually happen, at least right now, would be that the conflict goes on much longer. Because if it does, then yes, inflation will remain elevated. And at the same time, that elevated inflation, that high gas price for consumers, high airline ticket price, everything kind of goes up with that, would probably cause lower hiring, which would then turn to lower economic growth. So, however, that's not a certainty, right? Because if the conflict actually continues to de-escalate from here, if things improve, then that risk could kind of erode away. So it's something to keep in the back of your mind, is that if oil price bottoms out here and we make a move back higher and we stay there, it's really about like duration. I think. I think that the more painful thing would be, gas prices for consumers globally remain in the pain zone, right? Where you have gas prices hurting people's ability to spend money on other things, because it is a direct impact on consumer spending in other places. Like if someone was thinking about, I don't know, like maybe taking a trip this summer, and they were planning to save, I don't know, I mean, this is really real for people. Like, let's say you wanted to take a trip and you're like, for the next 3 months, we're going to save up, $250 extra each month to put away for our trip this summer. I don't know. Like, let's say you had some money saved and you're like, I'm going to save up and that's going to turn to $750. And then we can use that money to go to a trip to the beach. I don't know, something like that. And so people like, well, let's say that this is just a small, case study example, but let's say that now, because of the higher gas price, I don't know, this person, let's say they work where they have to drive their car pretty often. And let's say instead of $250 being able to save, now they can only save $150. Like, let's say their gas price costed them more. So now they only have $150 to save up per month if they're doing so. $450. And let's say that because that's not quite enough for what they needed to do the trip, they just don't go on the trip. Now, what is the impact of that on a bigger scale? If you did that times a lot of people, well, it's a lot less consumer activity. You see what I'm saying? Even if it's not necessarily I'm going on a trip or a vacation, it could be smaller scale than this. Let's say you typically on Friday nights, you go out to a restaurant with your family, but because gas prices kind of hurting the wallet right now, you're like, I can't do that for a couple of weeks. Like, until gas prices go back, we need to be saving our money, right? That is like the most real example I can think of. Instead of going out with a family on Friday night, hey, we're just going to cook at home, or we're going to order a pizza, right? It just is an example. So gas prices have like one of the most dramatic immediate impacts on consumer activities, because it's one of the most volatile components. It's why in the CPI, right, sometimes people like to look at the core CPI, which removes food and energy, because those things can be very volatile in nature. However, I think CPI with energy included is really important, because it really impacts, it shows the circumstance of the consumer. And so if we're looking at, oil price coming down here a little bit, obviously with the de-escalation ceasefire stuff, the market is wondering, is it going to be a continued improving story where the Strait of Hormuz remains open, oil prices can come down, etc., and things are okay? Or is this going to be drawn out? In which case, inflation could really see a dramatic rise once more. And the consumer price index looks at a lot of different things, but that's the question. And how does this impact, now that we've done our macro for the day, how does that impact the charts that we care about? Well, if you don't have a PhD in economics, having tools to screen this stuff for you is kind of what we specialize in at my company, A1 Trading. We build this stuff to track these things and to automate the analysis component that I just did, right? So I talk through it here on the show, but at the end of the day, the tools that we build help to automate that process. So right now, economic growth data has actually been more impressive than expected. Like retail sales at 0.6%, consumer confidence was upbeat compared to what people had forecasted. And when I say people, the people that do this, that's like Wall Street and economists. They're the smart people in the room. And the forecasts have been beaten recently for some of the economic metrics that, we watch. At the same time, the jobs market data has been holding up okay. Now, you might say this is where the argument of forward-looking versus backward-looking data comes in. And I know there was somebody out there right now is like, well, why would we ever look backwards? We should always be looking forward. Well, not so fast. Forward-looking indicators do not necessarily mean they're wildly more accurate than backwards-looking indicators. Let me explain. In the tariff sell-off that we saw last year, a lot of forward-looking indicators suggested we were going into a recession. Did we go into a recession? No. The stock market bottomed. The economy boomed, like it grew hard after that. Not necessarily because of the tariffs. I think part of it is the data center build out, the AI, kind of massive stimulus coming from the top end of corporate America, right? Microsoft, Meta, all those companies just pouring money onto the data center build out. I think that's kind of your big stimulant in the stock market world. But that to the side, those forward-looking indicators, and I rant on this because it actually drives me crazy when people are like, you look at only lagging indicators. I look at forward-looking indicators, as if forward-looking indicators are some kind of crystal ball that's never wrong. I can tell you that if you go back to April of 2025, when the market was absolutely cratering lower, forward-looking indicators at this time were dire, right? Consumer outlook was terrible. The PMIs were looking rough. Outlook for the economy was terrible at that moment. So those forward-looking indicators, right, that people hail as, the holy grail of some sort, those forward-looking indicators were dead complete wrong. Do you know what was right during this time? Do you know what was really, really right about the economy during this time? Lagging indicators. Lagging indicators said, while there's a ton of worry about all this stuff, it hasn't materially formed in the jobs data. It hasn't showed up in GDP growth. Lagging indicators were the far superior tools during the April sell-off of last year. Why am I telling you that? Because be careful what you hear just browsing social media about trading land, where people, say like, oh, indicators are lagging, or fundamental analysis is lagging, or unemployment rate is a lagging indicator. Fine. That's totally fine. So is the commitment of traders data by that nature. The commitment of traders data is a lagging indicator. Lagging indicator doesn't mean bad. Let me explain another thing that's a lagging indicator. Ready? Ready for this? Let me think of a lagging indicator. Put a moving average on your chart. If you follow trend, if you look at price action in any way and you are a trend trader, that is a lagging indicator. Why? You're looking backwards on the data to try and make some kind of conclusion about the state of this market. Anyways, let me just pull this up here. Unemployment claims did come out this morning, slightly worse than expected, 219. Final GDP also missed expectations, coming in a little soft here. And core PCE coming in at 0.4%. So as expected there, final GDP came in lower than expected. Unemployment claims lower than expected. Are we seeing any softness in the dollar here? Let's see. Not too much movement. News just dropped here and barely moving on the dollar. But let's just recap again. Final GDP was slightly lower than expected. Meanwhile, we had 219K unemployment claims. So not a terrible number, but also a little bit worse than expected and worse than we've had recently. We had a 203 unemployment claims last week, which was really low. So little bit of slowness in the jobs data there. Nothing of crazy concern, but final GDP coming in a little soft. So with that said, we'll bring in my good friend here, Chris Pulver, to take a look at the markets with me and talk a little bit about what has gone on this week and a bit of a change in the shape of this market. Hey, Chris, how's it going, man?
Good morning. Happy Thursday.
Hey, so we had obviously kind of the crazy reversal here. I know we were talking a little bit off air just about managing some of our positions in regards to some of the short premium ideas, some of the, for context for viewers who are new, Chris does a lot of options trading, so do I. Had sold a lot of premium or cash secured puts out of the money down in the lows here. And with this bounce, a lot of those are probably looking a lot better here today, right, Chris?
Yes, I think that this is kind of the Liberation Day mild version, 2026. This is kind of your taco trade 2026. It was a global rally yesterday. I'm seeing some of my risk overlays starting to get exposure back in the market. We're back above the 200-day moving average on the S&P, which is also a very positive sign. And not only just the 200-day, but we ripped all the way above the 50-day as well. So we went from everything stacked to the downside. Oh, that 200-day moving average is going to be resistance. To all of a sudden, one big push up like this, we're back above literally the 21, the 50, the 100, the 144, and the 200. Now, there's still some slack in here. I think I told you this yesterday. I'm like, 6,800 is a pretty key level because it was past support that broke. Coming right back to it and sticking is kind of making the bulls and bears decide, who's going to dominate here. But I would say right now the posture has kind of been reassured, at least for the next, let's say, this 2-week ceasefire. I think that the difficult trade would be if price is going to hang out between 6,800 and not go higher, and then hang out around 6,600. And we just have like this stuck like 2-week range where it's like, okay, ceasefire, what happens after the fact? But I would say that if we break above 6,800 with either drift or we break above 6,800 with more momentum to the upside, I don't think it's unreasonable to think we're going to hit 7,000 again.
Yeah, and I guess the thing the market is trying to piece together is like, okay, this ceasefire, is it going to hold, or is this an indication that both sides want to put this thing to the end, right? They want to end it, and if the continuation of the ceasefire takes place, if we see respect of it, then there's a good chance that the worst of it could be behind us. I think that's famous last words in regards to geopolitical stuff, and especially with Iran, because it's very difficult to predict exactly how things are going to go down. But at least, if you're keeping your indicator really simple right now in terms of geopolitics, number of ships going through the Strait of Hormuz is probably the easiest indicator you could look at, and it is on the rise, right? You're seeing more ships coming through. Where that is happening, I think it's more likely that you see that continue to open up more, especially if, I've heard this concept of a joint U.S.-Iran tax system or charge system on boats going through that. Have you heard that concept?
Yeah, I mean, I also don't think that the U.S. is just going to give the Strait of Hormuz. Iran is asking for sovereign control of the entire Strait of Hormuz. It's
Right.
that's a tough ask. And I mean, I think from Donald Trump's perspective and the entire administration, they want this to be a win-win, or just they want it to be, look, let's satisfy them. Let's stop this. This isn't about global shutdown. This isn't about killing fertilizer and ag products and petrochem and oil. It's like, I still don't know what the end game is. I saw an interesting post where it's like there's data centers, U.S. data centers that are riddled and littered all over the Middle East. So I'm like, maybe that has something to do with it. There's a Saudi Aramco pipeline that Iran is threatening to attack. Maybe that has something to do with it. But we're talking about oil at still $100 a barrel, and the infrastructure damage. I just think the tactics of Truth Social are unbelievable. That's how we're negotiating in 2026. Is I don't want to do it. I'm just going to destroy your entire civilization. I hope it doesn't come to that. And then all of a sudden, it's like we crack a two-week ceasefire. So I don't know, man. It's insane. I just think I do wonder if there was a lot of kind of extra manipulation, I guess, from Israel to U.S. And I think that we maybe got in over our. I don't know. I think we got in over our heads. I think if we continue to think it's all it takes is this 2 to 3 week skirmish and problem solved, it's like, I don't know. I don't know if it's that easy. I think certainly Trump wants it to seem that easy, but again, it's hard for me to turn. Again, looking at price, it's hard for me to be super bearish right now. But like you and I talked about, it's a good time to raise cash. It's a good time to see that these trapped long positions that were stuck, with exposure bullish, got stuck in a 10% drawdown. If that was painful, it's a good time to de-risk, deleverage. There's plenty of trades to take a stab at. There's plenty of defined risk trades to participate in. But I'm just going to let the market kind of prove it. I mean, this might be a decent low, Nick. I mean, almost 10%. That's a decent correction. We're right back above these big moving averages. Do I think the market gets to, 75, 7,600? I'd love to see it. I mean, I saw Tom Lee yesterday was talking about 7,700. It's like, I mean, he is a perma bull. You got to give him credit, but I'm also listening to a lot of people that are just macro analysts that just think there's no way this is sustainable. And then bigger picture, I'm certainly in that camp. It's like, I don't think we can keep going at this pace without just running the entire U.S. economy or global economy so hot that it's going to roll over in a hard way. But I'm not trading for that market. It's like, what do we have? I think yesterday was a big enough push to the upside. It's turning back into like a risk on regime, or like risk appetite is here in the markets. And now we just see what type of supportive price happens. And sector wise, is it going to be energy and utilities and all the boring stuff that's leading, or are we getting a bit in growth? I mean, we talked about how bad IGV was. I mean, IGV was up yesterday on a huge gap and it's faded today. How about MAGS? Up on a big gap and it's fading. So, I mean, these are I think tech wise, you'd see that these would want to be looking better. If this goes to the upside in Mag 7, then sure, markets catch a bid, market cap rallies. Just, I don't know, as you and I have probably said since I've known you, cautiously bullish. It seems pretty safe.
Yeah. No, I think that's always it's always, especially, I think that there is more of a case for me to be looking for bullish setups that are defined risk and cautious at levels like this, where you've had this clearing event, where you've had a lot of even hedge fund money, like big money, having to clear out, and may now have to reverse course and kind of get back into that. I mean, I like that play quite a bit. Another one that we have talked about, and I'm curious about this, Chris, is we've talked about every week for, gosh, I don't know, for a long time, the AA investor sentiment survey, just keeping an eye on this. And we did get a moderate uptick in bullishness over the last week, though you're still sitting at a situation in which
7 of 8 weeks, right?
Yeah. So we've seen pretty much multiple weeks in a row of high levels of bearishness. We are maybe seeing that shift back the other direction, bearish sentiment now toppling over a little bit, but not to, we're still at 43% of respondents feeling bearish. That tells me that you still have a lot of positioning that is betting against the market, that is on the sidelines, sitting in cash. And so, if you do get, I'll tell you how I'll play this. If you get a pullback in SPX down to like a 6640, 6600, I'll probably take a long stab at it. I've got my chart marked up. I really like the NAS setup here, but this would be with nothing crazy in regards to position sizing, and with stops below probably this 61.8% retracement. If we're going to go back and test this area, then I'd like to see that hold and start putting in a higher low, continue the march back. And if it doesn't, I'd probably need to get out of there at the 618 breakdown.
Yeah, I think that's a really clean setup. And I mean, the one thing you've got to give the market credit for that correction is how orderly it felt. It wasn't pleasant, obviously, once we cracked that 6,800 level on S&P. It was certainly more downside and consistent downside than upside. We had those bigger bullish days that were just faded. We saw the Trump tweet get faded. That was on that Monday morning where it was up. And then we saw, of course, the little ceasefire push yesterday. So, interesting kind of pivots and tug of war between the bulls and the bears. But I think looking at the thing you just talked about, the Nasdaq, I mean, S&P has a very similar structure where there's your break. So if we kind of slowly backfill, that candle from yesterday, but we hold above 6,550 or 6,600, I think S&P still look good for a bid. Stop loss, into this, let's say 6,400 zone, previous lows at 63 and change. I don't think we necessarily take out the lows. If we're going to see a bull market, I guess the question is, what do we test first, 7,000 or 6,300? I think right now with this move, as long as we have some follow through, I think 7,000 is doable. I do have some interest in setting up some structured trades like broken wing butterflies or bear call spreads if I get a decent enough premium for it. but setting them up here around like the 72.25 to 7,300 zone. The VIX has dropped a big amount. So this makes a little bit of my like speculative premium selling not as enticing, because let's say I would, pull in like $1.50 to $2 out of a $5 risk, for example. I'd still take on a little bit more risk, but now it's like that same $1.50 or $2 is maybe less than $1. Does that make sense? So there's like more inherent risk because I don't get the juicy premiums with the 25 VIX like we were getting the last 3-4 weeks. So today's expected move, for example, is under 50, which I think for the last, month plus, 2 months plus, this has been, average move expected like 55 to 60 plus. We've seen 70s and 80s. I've been seeing yesterday was like a pre-market calculation from Tasty, but it was like 94 points. Price moved like 30 for the day. So it's going to, force me to stick to a little bit more like tighter strategies when it comes to like zero DT trading. And honestly, right now it's like, I think after a day like yesterday, I'm going to try to just stay out of the way and let the lower VIX, VIX at 21. If we see the VIX going up at all, that should put a little bit of pressure on equities. If we see the VIX going down, it just means like, the bulls continue to climb those stairs. I'm going to try to stay out of the way. We should be in positive gamma today, I think. I'll look at a couple things mechanically.
Probably so. Chris, yesterday I did a couple things on the stocks and options side. I'll share with the class here on my side. I had done some short puts on Microsoft. This, I kind of lucked out on the timing here. I mean, I rolled out my Microsoft short puts from the April 17th upcoming expiration. I bought that back, and then I sold to open out till June at a lower strike price, collected a nice further credit for doing that on the short put side of things. So that was nice, because then obviously with the bounce in the market, Microsoft actually caught a bounce, believe it or not. The stock is actually able to go up. The problem is it doesn't hold those gains. Yeah, right. Yeah, it holds them for about 30 minutes, and then it came back down. But Microsoft has been a struggle bus in regards to the share price. But I've been playing okay on Microsoft, because I've been short puts, and I need to update this on my trading view, but I've been short puts. And so if the stock price goes sideways, it's okay. This bounce gave me the opportunity to take profits actually on my initial position. And then I was trading the SPY puts. And obviously with the huge overnight gap to the upside, I was able to close out of these short puts for an over 60% of max possible profit on it. So that ended up being a nice little trade for me. And I think kind of in the same way that you are, just getting out of the way of the run up, but the drop in VIX, obviously selling any sort of premium up in here is looking okay right now. So a lot of that VIX drop off has been good. With that said, I want to just keep some dry powder in case you do get another spike up in the VIX, in which case, kind of coinciding. I hope that we do get one. I hope well, as long as it's not a loss of life type of thing. But if you get some kind of VIX spike, some sort of concern in the market. And, here's the other thing, Chris. I saw somebody else talking about making the case for selling kind of a couple out of the month or a couple months out in expiration, selling like strangles on SPY, above the tops and below the lows, and kind of just thinking that, okay, the market is likely to see some kind of continuation of this ceasefire sort of thing. Mm-hmm. But at the same time, if you remember, I'm sure you do, but for audience members, remember that before this kind of accelerated to the downside on geopolitical stuff, we had already seen the market slowly rolling over due to concerns around software AI disruption. Chris, you mentioned that with the IGV a second ago. Mm-hmm. The Fed seeing rising inflation from this, and still the sticky high oil price could lead to interest rates remaining higher for longer, basically. So you have other things that the market, I think, will proceed to worry about. You have the private credit world stuff that's still concerning with, I saw like more net increases in withdrawal requests and things like that. So you are seeing some other things that are worrisome to the market. So I wouldn't be surprised if that's kind of the default outlook for me as well. It's like, I do think that we can continue to maybe make our way back to the highs. but I don't know that I'm in the camp of, the Tom Lees of the world thinking 7,700 by end of year, which would kind of give you like this Ripperooski rally for the rest of the year, basically.
Yeah, I think that's the type of rally. That's the blowout top that just gives a big middle finger to all the bears, which I could see happening. The problem is, I don't think that's sustainable. I think we had, let's see Tom Lee is right, and we go to 7,500, we go to 7,700, we go to 8,000. I'm probably going to short the market at that point. It's like, or just wait for a trend line break, look at structure to roll over, see another distribution pattern, and then be pretty bearish, because I don't think this is sustainable. To me, my thoughts on, Trump in general is he will do anything it takes to keep this scorecard pumping along. Like, look at me, I've got the greatest economy in the world. We're the biggest defense or military in the world. And by the time it all comes crumbling down, he's long gone. Not tied to the administration any longer. He's no longer president. He's a civilian. Maybe nothing ever sticks to that guy as far as, 30 felonies. Doesn't matter. He'll be gone. And so I do wonder what midterms actually show us later this year, but it's like, that's too far out. That's what's so crazy. It's like, I wish it would be like more prudent to be a long-term investor, but it's like, I'm not at this stage. It's like, there's just too much tail risk. I think yesterday's move kind of eliminated some of the left side tail risk because we were starting to roll over. But you take a look at where the Fed is at. I mean, Kevin Warsh stepping in a month or so. The Fed has no idea what to do. I mean, we have oil prices up. We've got higher inflation. Everything came in PCE wise today, like right as expected. So, I mean, you see the headline forecast for tomorrow. The headline CPI tomorrow was like almost 1% higher. Curious if the market actually sees that print. I feel like it's still going to be suppressed data. Anyway, Fed is not looking to do anything.
3.4% tomorrow.
Yeah, way different, way higher. The Fed cuts, I mean, I think last time I looked at this a week or two ago, they were talking through, I mean, the only probability of rate cut I saw was like October 2027. Now that's maybe been shifted to a September 2027. So the Fed is doing pretty much nothing. And, we've mentioned this before, like they've been kind of neutered compared to fiscal policy. So the Fed really can't do much outside of don't F it up. By cutting too quickly or raising too quickly or doing anything. It's like they're just kind of backed into a corner with like they're ineffective at this point.
Chris, is Warsh going to come in and do the dirty work and cut rates even though the market thinks they shouldn't?
I mean, can you be a Fed chair and cut rates without consensus of your panel? Because I
would genuinely hope not. Because I think
the same. It's like if there's a consensus, I feel like there's no way that he's going to have majority to cut. I don't think
there's a lot of people who are kind of in the camp of thinking, he's going to be a Trump puppet completely, and then there's other people who think like exactly what you just pointed out. There's a practical amount of dovishness that you can apply as Fed chair, but there's also the reality of like your peers will revolt against you, and not just your peers. Your peers will revolt against you because the bond vigilantes will revolt against you, and everyone will be like mistrusting of the Fed. And you really, I mean, Warsh is stepping into the fire line, like, because Trump is like rate cuts no matter what. And the market is saying we can't do rate cuts. We just had a huge surge in oil price. We can't, like, there's just no rationale. There's no rationale to rate cuts when, look, you had, again, at the end of the day, the data's not calling for drastic rate cuts. Like if we are looking at just, objectively, I know there's people who, get all upset about economic data saying it's all fake, but let's just take for granted for a second and say that it's decently reliable in terms of general direction. The jobs data came in better than expected. Sure, there may be downward revisions. There were downward revisions for the prior month. But it still is an indication that we had a triple in terms of forecast versus expectation. Unemployment rate still remains lower. Weekly jobs claims were a little bit soft this week. The point is, it's not falling apart. That's what the data would generally suggest, is that the economic growth is still upbeat. We've had a round of economic data here recently in the US that has been better than expected. So making the case for we need to drastically cut interest rates in an environment where the 2-year yield has drastically moved higher, that inflation is expected to move higher, as we just got done discussing. We're at 2.4% in the last report. We're expected to go to 3.4% tomorrow. That is the forecast. So you look at that and you say, how can you justify a rate cut in that setup?
You can't. I mean, from a pragmatic standpoint, you can't. I think that there's too much fragility to the overall market with the consequence of a rate cut. Because typically, what happens is the Fed cuts rates, they're supposed to keep cutting rates. If the Fed raises rates, it's like a one-time rate hike, or it's a it's a rate hiking cycle. I don't think there's a need to do anything right now. And look, nobody said the Fed's job is easy. I think the biggest risk to the Fed right now is if Warsh comes in as a loyalist and a yes man, it is certainly going to tarnish the reputation of Fed independence. And and again, for the sake of like longevity in the Fed, look, they have backstopped some major crises. Right now, that backstop is way lower than 10%. I think Trump is the first line of defense in the markets, as we've clearly seen how vocal he has been. I mean, every day it's been Truth Social. Every day it's been something. He's on the economic calendar, for God's sakes, a couple times a week. Right. So Trump is the first line of defense, and he's doing the job. He's backstopping the U.S. markets and the ceasefire stuff. I don't know if the U.S. ever intended to dabble in Iran with any long-term plan. I think it was, I don't know, dude. I don't know what the end game is, but I do know that this is a global disruption. It's added some friction. Yesterday's price action shows either this is a one-time pump to de-risk, deleverage, or this was enough to turn risk off into risk on, and now we'll see that price will prevail to maybe drift a little bit higher. Obviously, it's easier for the global economy to see higher stock markets across the board. But I do think that there are going to be a lot of frenemies now. I don't think it's going to be like U.S. and allies. I think it's going to be a U.S. and frenemies, because they have to do business with us by default, as opposed to at will. It's again, I don't know if like the U.S. is all of a sudden becoming like the big bad global everything, where it's like, oh, we just have to do business with them because we don't want them on our bad side. We don't want Trump on our bad side. But anyway, back to the Fed. It's like, we'll find out. I mean, I guess in 60 days, when Warsh is officially the Fed chair, I mean, they're going to have a press conference and a rate decision. And from what the futures market says, there's nothing getting priced in. I have not seen anything on the Fed Watch tool that suggests traders are pricing in this or traders are pricing this. Nothing is going to change in the Fed. I think it's going to be the most boring thing to watch, even though every month it's going to be, oh my gosh, it's a rate decision. What is the Fed going to do? Probably nothing, because why? Oil prices are sticky, and, U.S. markets are slippery. Inflation's, again, sticky. Look at rates, sticky. It's like, what do you do? Nothing is like allowing rates to come down. Our changes in rates have been so aggressive lately that, I mean, are we going to see mortgage rates go back down sub 6%? Probably not with some type of, it's going to have to be some type of weird program. It's going to have to be subsidies. We're going to have to be, I mean, the kitchen sink from Donald Trump and company will probably be like sending checks to households again. How is that not inflationary? Yeah. It's like all these things. It's like Donald Trump kitchen sink there is no budget for the U.S. He will do, I mean, we're talking about adding 50% more to our military spending in the fiscal year 2027, which starts October 2026. That's $2.5 trillion, right? So, I meing, yes, during COVID, the U.S. added like $5 to $6 trillion. It's like, we talk about this like it's funny money, but at some point this matters. So, going to 7,500, going to 8,000 with $42 to $45 trillion in debt, I don't know how that's sustainable. And we haven't really had a nasty bear market. We've had like these flashes and transitory recessions, but again, I can't think that far out. It's silly to think that far out and be doom and gloom when it's like, this market is still the most resilient thing in the world. The financial markets are the most resilient thing. And even if I was a bear, you can't trade like a bear. You can't just like set it, forget it, be a bear and walk away. It's like, because you're going to see all-time highs probably way before you get your trade that you want.
I think being a bear is just so ridiculously hard. First,
well, what are you fighting against history? It's like, how many all-time lows have we made? Go back a century and there's your all-time low.
Probably
making all-time highs of a century of all-time highs. It's like, how do you be a bear outside of going to cash is fine. Going to cash and avoiding tail risk is fine. But being a bear is, I think it's been like sensationalized since the Big Short movie came out. It's like, yeah, it was a great time to be a bear when the market's down 50% and some, handful of traders and prop shops made a shit ton of money. But other than that, you're fighting against all of the levers that have been built and put into place to prevent that from happening.
I think there will be a time again at some point, Chris, to be a bear.
Sure.
But I think it is so
I'd rather just stay out. I'd rather be cash. I'd rather be
Yeah.
cash and ready to buy the biggest drawdowns and the biggest dips where it's like,
Yes.
I've got cash to buy stuff as opposed to I need to make a ton of money on the downside. I
I've
just need to survive
probably
the downside.
in the last like 3 years, Chris, I think I've been short the market 2 or 3 times. I shorted the Dow. We talked about that. I shorted
Yep.
the Dow. It was not a huge position. I did make some money on my Dow shorts. It's I also shorted the Russell in 2023 when rates were moving higher again. I didn't like the Russell, so I shorted the Russell, and I think I took 2 trades there. I took one winner and one loser, and I think I was net break even. Long story short, I've not made a lot of money on the short side, and I don't know very many people who have. It's like the hardest thing in the world to try and bet against. There's so many forces at play.
Yep.
One thing that most leaders around the world want, they want the markets of the world to go up. They do not want them to go down. Even if they are staunch enemies, China and the US, they don't want the financial system fall apart because it destroys both of them.
Right.
It's kind of like nuclear weapons. It's like mutual assured destruction to have stock markets go down and stay down and keep going lower and lower. So when the tariff stuff happened last year, yeah, multiple parties, while they all kind of put up a front that looks strong, Trump administration, Europe, China, everyone kind of puts up a strong front. They also know, like, wait a second, none of us can survive that. We have to find deals to be made. And
the dead engine too. It's like the more downside you see in the markets, the more the tighter the dead engine gets, and that truly is what is going to be the most dominant thing. Is we need money to flow. We need liquidity and credit to flow.
Yep.
If things get tighter, I mean, everyone's worried about this private equity stuff. I'm talking to a friend of mine that's in California. He's working through like a Goldman Sachs subsidiary on private equity space to buy his lab. And we just talked about the surface value of like, this is such a small chunk of a Goldman Sachs. This is a small chunk of BlackRock. Yes, it sucks that the redemptions are not given, or they're taking like small percentages of redemptions. But as a private equity limited partner, you're not obligated to get your money back until the holding period is up. You sign the dotted line for a 5 to 10 year illiquid investment. Mm-hmm. So this is why it's making a big stink in headlines. But the reality is, we're talking like, a couple $100 billion versus companies that are sitting on $6, $7, $8 trillion. Like, it is, if it went tits up, it's a write-off and it's going to be backstopped. So this private equity, like the cockroaches, and it's just optics. I don't think the market is really going to be financial crisis because of private credit. If you give these companies enough time, if they package up like subprime private equity type stuff, then sure, there's some bad deals in there, but there's also plenty of good ones too. And it's such a small portion that's like, this is not what I think this is not where like the puck is going type stuff. So again, credit and debt and refinancing, it is what is fueling and driving a debt driven world that we need to find a way to keep that wheel greased. And so that's why the markets want to see stability and want to see upside. So yeah, there's way more pressure and way more reality when it's like things go down in a nasty way, which is why they tend to happen a lot faster and they're over with. But the one thing we haven't seen this year is we haven't seen a VIX event, right? We haven't seen a VIX at 40, 50, 60 to mark a bottom. We just saw the VIX like kind of go up to 30 and then fall back to 20. This could be the entire year. That's all it does, is maybe stay between 20 and 30. And that's going to be, again, like a challenging, really interesting year to trade.
Yeah. And again, very controlled overall pullback, even though it doesn't feel like it when you get down to the individual level. It's been moderately contained, especially with, the VIX only getting up to, I think, a 35 at the highs. Chris, we're out of time. We got our next show host here starting in just a second. As always, thanks for coming on and sharing your thoughts and opinions on what's going on in this crazy market. Appreciate your time today, man.
See you tomorrow.
See ya.
Thanks, Nick.
Guys, up next, we have Miko Audu. He's taking over the stream. Going to be taking a look at some technical trade setups. If you're someone who is interested in a lot of charts, I know sometimes the criticism that we get, Chris and I, is we tend to rant and talk macro and economics and all that stuff. But to balance us out, our next show host is going to be way more charts focused, which I think is always a great thing to add in. Miko Audu, of course, you can check his channel out if you want more content from him, but he is a guest host that takes over the stream once a week and does a great job. Last thing I'll say before we throw it over to Miko is the 40% off discount is currently going on right now on the EdgeFinder. We've extended it to our VIP group as well. You get access to EdgeFinder, for example, with our asset scorecard, crowd sentiment tools, COT data, track institutional money, our top setups indicator, and much, much more. If you've been thinking about getting a copy, now is the time to do so at 40% off. And if you have any questions, if you need a payment plan, if you need to speak to someone to make sure that it is a good, correct fit for your trading style, then feel free. Don't hesitate to send a message to our support team using the link in the live stream chat that has just been dropped there. Or you can do so just by heading over to our website, a1trading.com, and chatting with a member of our team there. With that said, up next, Miko Audu. Stay tuned.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
Okay guys, what is up? Good to be back. Hope everyone is doing well. As always, we're going to go through a bunch of different markets. If you do have any requests, any particular markets you're focused on, or any particular time frames within a market as well, feel free to chuck it in the chat. More than happy to take a look. But I've got a few markets which I'm interested in, especially after some of the big moves we've seen this week in particular. So I'm going to go through that to start with, and some where I'm kind of just indecisive. I'm kind of waiting for the market to make another move to speak, and then I'm going to maybe cement a bias in. But to start with, I will go through some USD pairs. We've seen some weakness on the dollar this week. I'll start with the DXY because that shows it very, very well. And yeah, over the past kind of few weeks, few months, we've been speaking about this larger range, and price has been trading within it for quite some time. And over the past maybe 2 weeks, it was kind of debatable whether we're going to see a breakout, or of course prices are going to respect the higher of the range and maybe reverse. And that's kind of what we've seen this week. Of course, we had a bit of an aggressive push on Monday, and essentially price has not broken through the high. And I said if price doesn't break through the high, well, the next destination we're looking at is going to be the midpoint of the range. So this is the range high, range low. That more or less is the midpoint. It doesn't have to be pinpoint precise. I just use a Fibonacci to classify that. But more or less, that's going to be our fair value of the range. So with price rejecting the high, I'm looking at a bit more weakness for the dollar, maybe over the next few days, week or so. And I'm looking at a push towards 98.3, 98.4, around that area. So I'm looking for a bit more dollar weakness, which potentially could mean a bit more upside for euro, a bit more upside for pound potentially. Now, we're not getting the breakout. That was the only real condition for me to be aggressive, bullish bias on the dollar, which was a break of the range high, and then I'll be looking for trending continuations as long as we stay above. But of course, that hasn't happened. So I'm looking at some more downside for the DXY. And of course, if we take a look at some of the USD majors, that's pretty much the flip. So you can see Euro's kind of done something different. Let's take a look at the different chart, doing some work on that chart. But in terms of Euro USD, we've basically done the flip of that. We've consolidated, now prices broke to the upside. So in terms of where we could be headed, I'm looking at 1.18 roughly. And Euro is in itself its own range as well. So it's not as textbook as the DXY, because you kind of got this mad spike over there, but essentially we've got more or less the highs, more or less the lows within these parameters. So I'm looking at a push for Euro back towards this area if we can see DXY roll over. So I'm actually quite bullish on Euro USD. And if we can look for some pullbacks in the 4 hour, I'm quite interested for some longs in and around this area, 1.16, which is basically the retest of last week's high. So if we can come back into this area, healthy retracement, essentially trying to see the next higher low. We've been fairly consistent over the past couple of weeks of that. And then I'm looking for the continuation. And Euro to me looks like the best USD pair at the moment for that opportunity. Pound USD not quite there, just because we've got a pretty significant resistance just above our head. So I don't really want to be buying into that. If we can break through that, that's a different story, because if we break through that, the buys actually become pretty clean. And similar to the USD, similar to the DXY, this is another market which is in a larger range. If we can show some intent above resistance here, well, the next key area for me will be 1.37, 1.38. So a break above that, very, very bullish bias for pound USD. And we kind of have synchronicity between the USD pairs there as well. So Euro looks good already for some pullbacks and continuations. Pound could do, but we've got a bit of an obstacle in our way. And in terms of some of the other markets which I'm interested in, indices, of course, really exaggerated breakout this week, and they're looking very, very interesting. They are at a bit of a significant turning point, because a lot of these are coming back to the midpoint of the bearish legs we've seen. So you can see from the most recent all-time high back to the most recent low where we turned bullish from. Price is at the midpoint of this area. This is kind of like a make or break point. If we can see some real strength through this, then I'm going to be very, very bullish naturally with, well, this is US 30, but if you take a look at the S&P and take a look at the Nasdaq, pretty much the same situation, which is really exaggerated moves lower and then prices flipped around. And I actually want to focus on the range actually with the Nasdaq as well, because essentially we've had the fake out of the range and prices reclaim that. And actually we're at the midpoint of that range too. So as you can see, prices just tested that area. So the midpoint is just an area of balance. You know, we've seen a move lower, prices now retraced halfway. It's kind of a deciding point whether the sellers are still going to be active and still push price lower, or they're not going to defend and maybe the buyers are back in control. In terms of opportunity, I do think US 30's got the best opportunity, just because now Nasdaq and the S&P has already seen a strong move higher. Unless these guys come back to these areas, that's really where I want to do my business in terms of looking for buying opportunities. Don't really want to be buying up here. Kind of 50% of the move is already over. We could, of course, go a lot higher, but this is really where I see value. In terms of US 30, I like it as well. And where I see value will be down here too. So again, don't really want to get involved here, but if price can pull back and hold that structure, I like the buys. And we pretty much have a repeat of the last pullback we had in 2025, which was the retest of this high. So you can see price create an all-time high, broke through, came back through for a retest. We've had a significant reaction. Price has essentially done that again on our last breakout essentially. So again, your all-time high, price pulled back, broke above, retest. It looks like we've got the repeat of the pattern. So I'm very, very bullish on the indices at the moment. And if they break through that midpoint area, then I'm going to be very, very bullish. I'm just looking for intraday pullbacks all the way back to the all-time highs, as long as market structure holds. Of course, things can change, but as long as market structure maintains bullish, I'm going to be very, very bullish. Because we've got higher time frames and the lower time frames lining up, and market structure agreeing with that. I'll take a look at gold. I'm seeing some gold requests. I'll go through gold as well. So gold's an interesting one. It's basically another, it's actually similar to the indices in a way. We've had this really aggressive sell-off here as well, and you can see prices now dancing at the midpoint too. So again, this is a bit of a deciding point in terms of what the next leg is going to be, because equally, I could see price holding resistance here, forming another lower high, and then continuing that bearish momentum we saw throughout this, the first kind of quarter of the year. So we could see price have that continuation. Equally, if price does maintain bullish structure and break above this, again, I'll be pretty bullish for gold as well, looking for pullbacks on lower time frames. Next area of value would be this area. That's kind of essentially where we had our breakout from. So I'm not really bullish. I'm not really bearish on gold, at least from a technical standpoint. This is a deciding area for me. If I can see some significant rejection here and price shows momentum lower, I'm going to be very bearish, looking for us to return to support, potentially back to the all-time lows as well. So this is really a deciding area. At the start of the stream, I said there's some markets which I'm kind of just still deciding on. This is definitely one of them in terms of what my bias is going to be, because I can see price going both ways. I don't want to be too predictive. I want the market to show its hand, which way is it likely leaning towards, and then that's the direction I'm looking to follow. So yeah, gold, of course, over the past kind of week or two, we've seen some nice bullish structure, but like I said, we're coming back into a bit of a wall right now. So do I really feel comfortable buying here? Maybe on an intraday time frame, if I'm just going to be in it for a session or at most a day, yeah, because I'm still taking advantage of that momentum. But would I feel comfortable looking to swing a trade for the next week or even more? Absolutely not. I don't really have clarity and direction here. So I'm waiting for gold to develop a little bit more. On my stream yesterday, we were talking about this level here as an interesting place for a buy. If price can retest this structure here, that would be a nice place for a buy. But again, short term. Direction isn't particularly clear, so I wouldn't be looking to hold trades for too long. This is kind of a nice consolidation and a nice breakout, actually. So that there's a nice short-term buy. I just wouldn't be looking to try and take it further than that high. So from a swing perspective, I'm still being patient for gold. Same situation for silver as well. Not much different. Actually, no, silver. Has silver tested the 50? I think we have. Yeah, no, missed it by a small margin. But yeah, same thing for silver as well. We're seeing this really corrective move higher. And as we come into this area, it's a place of indecision. Is price going to break out? Are we going to see momentum continue bullish, or is price just going to have a bit of a rollover and just continue the momentum? Again, don't necessarily want to be too predictive. Wait for the market to show its hand, and then I'm trying to find the continuation of that. If the market breaks high aggressively, I'm looking for pullbacks and higher prices. If it starts to break structure lower, again, pullbacks, lower prices. So very, very much keeping it simple, just waiting for the market to give us the indication. And yeah, a lot of even if I take a look at platinum as well, kind of a similar situation too. So metals, I'm being patient. Indices, we've had that strong push. I'm trying to look for continuations on pullbacks. And then in terms of the USD pairs, I do like the weakness we are seeing. I'll go through some more USD majors. I'm seeing some requests for some USD pairs and the USD dollar CAD. Of course, if you guys have any other requests, feel free to drop in the chat. More than happy to take a look. So ends the USD, not really a USD pair I trade that often, but nonetheless, another USD major, which again is going to be a very heavily traded market, but I like my euro, I like my pound. Sometimes maybe Aussie as well. But in terms of New Zealand dollar, we're seeing some momentum. And in terms of direction, it's not clear at all. Yes, we have a very, very big bullish candle on the daily chart, but in terms of where the market has been traveling, if we look at the average for the past few months here, it's pretty much just this. So in terms of opportunity, if the market average is very flat, the only opportunity I see logically is going to be buying low and selling high. Looking for kind of mean reversion plays, just looking more so at levels and areas and zones rather than trying to predict the next move, because all price is doing is just oscillating and fluctuating. So I don't really see much value in terms of trying to say where price is going to go next. Where I do see value is if we can find some significant levels of support and resistance, seeing how price reacts to those areas, and then looking for some mean reversion plays. So in terms of New Zealand dollar, we've already reacted with a significant level, which is this prior low here on the daily chart. I'll drop a bit more intraday in a second. And now we've had a reaction there. The next major area on the daily chart, which would make sense to me, would be all the way up here, which I know is very far away, but that's the significant place I would only look to do business from a daily perspective. You can see price held resistance over there. Or of course, if price does roll over and break support, then I'm going to be keen at this low as well. So just making sure I'm playing the lows and playing the highs, because At the moment, that's kind of the price act. That's kind of the sort of behavior that price is rewarding. In terms on the 4-hour chart, of course, we've got more of a short-term trend, and it looks like price might be flipping that bias. Yeah, I would only be looking for short-term moves as well. Direction isn't particularly clear now. Again, on the 4-hour chart, you had that bearish flow there, so naturally leaning towards more of a bearish bias. But now that price is now starting to break structure and we're seeing some strength come into play, the next opportunity I would be looking for would be a pushback to resistance, but only a short-term sell is what would make sense to me, because things are shifting. We're not really seeing much momentum anymore, so I'm not going to be greedy and try and look for a home run. But at the same time, I can't necessarily predict this to happen as well. We don't really have that much information. Price is taking out some structure. Yes, we've seen some strength, but just because of that, I'm not going to necessarily expect a full reversal. So I would still have a seller's bias on a 4-hour chart. But yeah, I wouldn't be looking for any major move. Keeping it very simple, coming back to key resistance as well. It depends greatly on how we react to that zone. Of course, if we see a big candle closing above, I wouldn't be looking for a sell. But if we can see price slow down, get there, wicks, rejection, I think a short-term play, maybe to the midpoint of this impulse, that could be a smart trade. Not looking for anything too meaningful. And if price does retrace and continue, you can probably still profit on that move if you can at least capitalize on the retracement. So yeah, New Zealand dollar, I'll be looking at some short-term downside, but being very, very sketchy with this one. Direction isn't clear whatsoever. Dollar CAD, that one's been pretty bearish. Of course, USD weakness has come into play, but again, dollar CAD, another market similar to, a lot of the USD pairs are actually very flat as well. But yeah, another market that's pretty flat. Again, looking at the daily chart, looking at the bigger picture, again, that's your average price for the past few months now. So we're not really going to be looking at momentum plays. We're not really going to be looking at trend plays. If you are, you're not shooting for the moon. You want to be taking your profit a bit earlier and toning down your frequency of those type of plays. What the market is rewarding right now is literally buying low and selling high. Coming back to key areas, buying at these support areas, selling at those resistance areas. That's what the market is rewarding. Not every time, of course, but if the market's just going to find a mean and oscillate around that, and of course you want to be selling above it and buying below. And now that price has reacted to another key area, the next zone that makes sense to me would be a push towards that prior resistance. Price was ranging for a few weeks there. We've had a breakout, really sharp momentum. Haven't really come back for the retest as well, so we could see a bit of a draw on price back towards that area. Naturally, that could be a nice place for a buy as well. So again, dollar CAD, I don't really have a bias with this one because the high time frames isn't clear in a direction. So it's more so just finding areas of opportunity and looking to trade there. Like I said, I did have a slight USD bearish bias, but if dollar CAD gets there, my bias could have changed by then. So yeah, dollar CAD, another one where I'll just be looking to sell high, buy low. If we can come back into resistance here, if you can get some entries and some stops above the high, that makes sense to me. And likewise with support around 1.374 as well. Anything in between, I would be very, very skeptical of trading unless you're looking for some very short-term, intraday opportunities. Then yeah, I can see some logic there. But otherwise, again, one of the biggest skills in trading is literally just trading in tune with the market, because we can have trend following strategies, we can have mean reversion, we can have breakout strategies, whatever type of strategy you want. Each one of those strategies will have those times where it shines and it performs very, very well. And the only thing that correlates with that is the condition of the market. If the market's trending, you want to be trending with it, of course. If the market is just all over the place, then either step away, reduce risk, or have a strategy that does well when the market's all over the place. But yeah, this is a market which is really flat, so I just want to be buying high and selling, buying low and selling high. Sorry. And Aussie dollar is an interesting one too. We spoke about this one last week because this one was consolidating, and I spoke about the breakout, and I said as long as we can stay below the support level we broke out from, there's a lot of room to the downside for Aussie dollar. There's a lot of room to the downside. Next major support will be around here. I quite like the idea of sells, but the market threw us a bit of a curveball there. And was this Monday's candle or Tuesday's? Yeah, Tuesday's candle closed straight back above, which pretty much invalidates that opportunity altogether. And now, of course, Wednesday gave us another push. Thursday, we still got a few hours left before that closes. So again, keeping it simple, there's your range high, there's your range low, failed breakout. Now we probably have a pretty good chance that price now gets back to the higher end of the range again. And then we're just back at square one. If price rejects this, great place for a short. If price breaks out, we can speak about continuation. Keeping it simple. And I always want to point out the midpoint of the range because that's always going to be the first target I'll have for any range I'm trading. If I'm selling at a high of the range or buying at the low, the midpoint is just naturally a place where price is going to test, and maybe sometimes it'll break through and go to the opposite end, or sometimes it will come back and push towards your entry, kind of like, you know, over here, kind of found support, reversed. This one was a bit of both there. But yeah, Aussie's looking pretty bullish. It looks like the USD pairs are pointing in the direction of USD weakness. That's kind of where we're seeing momentum right now. As we looked earlier on the DXY, there's still room to the downside for the dollar. So I do anticipate some more weakness over the next few days for USD. So primarily I want to be trading that direction, looking for pullbacks on that way. And as I said before, the market, the USD pair, which I like the most for that play, is at the moment euro on the pullback, or maybe pound USD if we can get the break of the resistance we're trading at. And then, yeah, I would like pound USD as well. So clear this level. I think there's some really nice room higher. But at the moment, euro looks already favorable. You know, already seeing clear structure being taken out. We've got clear structure to retest. The next area of value I see on euro is back over here. You know, that's a significant distance between price and next kind of big level resistance from a technical standpoint. Of course, we can find resistance anywhere, but that's an area which I would be looking to target, or at least partial towards. So I'm liking a lot of the USD pairs at the moment, just because direction looks quite clear there. So when direction is clear on the higher time frames, that's the time I want to be looking to do business. When direction isn't clear, I'm going to be very, very careful. I appreciate that, Tumas B70. Okay, I'll quickly go through Aussie CAD, UJ, and BTC. Okay, so Aussie CAD, not a pair which I've been looking at too much recently, but more than happy to take a look. Okay, Aussie CAD's a bit interesting here. A pretty textbook range, and prices smash straight into the high of that. Let me see where we are in a broader perspective. Okay, so I mean, there's still is room to the upside, and this is a breakout within itself, because we were flat for a few years here actually, and we've actually seen some really considerable momentum above that, and we're actually holding above. So if price does break the highs there, I wouldn't be surprised if we do continue this momentum back to 0.99. So there is still room to the upside, but again, keeping it simple, not so much trying to predict things here. We just want to know, okay, where could price go if something happens? But it's more so trade what's on our screen right now, which would be price holding resistance here. So if I'm looking for opportunities in Aussie CAD, I'm looking for shorts here, stops above the high. Again, let's point out that midpoint as our first target, or at least a place to partial out. So that's around 0.964, 0.965. So if I get a short here, stops above the high, that looks like a healthy risk reward in itself, more than a 1-to-1. And then I can take maybe at least 50% there and leave the rest to run. And that probably looks like maybe a 1-to-3 or something, or 4. So in terms of opportunity, it makes complete sense to be looking to short the high. It's been significant resistance over the past few weeks. If we can maintain that, it's a clear short. If price breaks above, then of course we probably take a stop loss there. But if it does break above and we do see trending conditions like we had here, as we said before, there's a lot of opportunity to the upside. So either direction, there looks to be opportunity there. So I like Aussie CAD. There is distance to the upside. I don't really like the pair that much because it's very, very choppy and doesn't give many pips and can consolidate for long periods of time. So characteristics are not particularly great, but I do like the structure. If this was on like a more friendly pair, like a euro, dollar, pound, USD, or even a pair that moves a bit clean like a pound yen, which isn't necessarily friendly, but it does trend pretty well. So if you can catch breakouts well, they are quite rewarding. But yeah, I like the structure both ways. Again, if we can hold resistance, sell makes sense. Breakout, the buys make sense there. So again, you can see we're not necessarily trying to predict where price is going to go, but both scenarios, we can take advantage of that. In terms of dollar yen, and I'll do BTC. So dollar yen, I'm actually still very bullish on dollar yen, even though that I'm not so bullish on the dollar at the moment right now. But in terms of price action, we've been super consistent to the upside. So I don't want to be looking for any selling opportunities on dollar yen whatsoever. For the past few months, that has just been continuous momentum. And of course, if you look at the other yen pairs too, they're just trending pretty well. So just in terms of stats, I don't want to be looking for any sells in these conditions. So I'm looking at more upside. The situation is we're kind of stuck at the moment. Looks like price is finding a bit of consolidation, not really breaking through the highs here well. In terms of opportunity, I just want to be looking to buy low within this, particularly at this level here. You can see support over there, support twice. If price can come back and retest that, I think that's a great place for a buy, because essentially you're doing two things here. You're trading the low of the range, so you're just buying the low. And two, you're kind of still playing the trend as well in the higher time frame, because things are still bullish. Despite the fact we've been sideways for a while now, the market is still overly trending to the upside. So you're in the direction of trend, and you're kind of still in the direction of the range as well. So you're kind of doing two birds with one stone there. So I like the buys here for dollar yen. If we can roll over one more time, reject this well. Again, you don't have to be looking for the home run. It could just be a push to the end of the range, or like I said, the midpoint too. Both areas make a ton of sense. So dollar yen, I like the longs, 157.5, keep an eye. And BTC, this is still ranging. Maybe it's thinking about a breakout, but I wouldn't say we've got any kind of clear signs of that happening just yet. Momentum's picked up yet, but we're still kind of banging our heads on that resistance. So BTC, I'm actually really interested to trade because I'll be doing a lot of testing on Bitcoin, and it loves a consolidation and it loves a breakout. And because Bitcoin is quite volatile, when it breaks out, it really does break out. So the opportunity on the breakout is very large. So once we see some signs of breakouts on Bitcoin, I'm more than happy to be taking some longs. You can see the last time, or shorts of course, if you break lower. Last time we had a consolidation price at a breakout, you can see how violent price is then. It does that pretty much throughout history. So if we can see some signs of a breakout, of course this here was a fake out. Not every breakout is gonna work there. That's the other side of the coin. But in terms of opportunity, things really pick up. That's something I want to be getting involved in. So again, intraday, I wouldn't really do much here. There's no kind of trend to follow. We're still kind of ranging. I wouldn't be surprised if price kind of just measly rolls back over. I don't see much opportunity, but if we can get some volatility, maybe price spikes through a solid daily candle close, that for me is something I'm interested in. And yeah, looking for pullback plays, hoping to take advantage of a breakout. But yeah, guys, we have come up to the end of my segment. Run over a little bit, but I appreciate everyone for listening in. If you have found it useful, feel free to check out my channel. I do stream there as well, so feel free to check it out. Thank you to Nick and the team for having me on the stream, and I will be back again next week, guys. So appreciate it. Drop a like on the stream, show some love as well. Thanks for having me. Take care. I'll see you all in the next one.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello. It is James. No, it's not James, it's Marco. So we have switched things around a bit, switched the schedule. I'll be starting and then Alan will join me a bit later for the joint segment. I hope you guys are doing well. We have had some developments this week, some catalysts, or one catalyst. The markets are all about the US and Iran conflict still, so that's the only thing moving the markets. And whatever you're trading, you're essentially trading oil. Okay, so everything is pretty much connected with oil. FOMC meeting minutes, we had them. They don't matter as much if I open them up here in the news calendar. So let's see. FOMC meeting minutes, yeah, don't matter much. NFP, let's see, the RBNZ, the Fed interest rate decision, it's all gone in the background. So the whole markets are now revolving around US and Iran. The catalyst we had this week is a potential ceasefire. So could we get a ceasefire, or is it an actual ceasefire? That is the question. The markets definitely moved. We had a big risk on event. Oil prices massively dropped. Stocks went up quite a lot, broke a key trend line. So definitely a lot of movement. But my question is the ceasefire for real? I'm going to talk more about it, but before I continue, if you want to participate in the DNA funded giveaway, make sure to fill out the JOT form that I just posted. So fill out the JOT form. You'll get entered into the DNA funded giveaway. It is going to be a 5K one-phase DNA account. Okay, let's continue. Back to oil. I got taken out of my previous position for 1.5%. Okay, so 1.5% on that previous position, which is pretty nice, pretty happy with it. I got taken out at around 109.43. The new position I took today, I entered 9939, 8935 is the stop loss right below the swing low, and I'm targeting the previous highs, which does give me a positive reward to risk. So that is the game plan. I'm expecting more of a risk-off scenario. Unfortunately, I don't believe the current ceasefire is here to stay. I think it's exaggerated. I think the move in the markets was crazy, and I think it was a bit too crazy. Okay, stocks moving that much, oil dropping massively. I think it was an exaggeration. If you look at the demands, if you look at the demands for the ceasefire, if you look at the US side and Iran side, I actually posted a good document in the A1 Discord about it. I don't have it prepared at the moment here. Or maybe I can do it. Just a second. I'll try to get it up. Just give me 1 second, because it's from Andrew Campbell and it's a private newsletter, so I don't really want to put the whole thing out for free, because it's a paid thing, so it wouldn't be great. But what I can do is I can share just the tabs. So let's do that. If I put this here and minimize this window, expand this window. Okay, it's there. Great. So, United States plan and the Iran plan. The main problem with this is, look at this. Where is it? Acceptance of Iran's right to nuclear enrichment. So that's a no-go. Not that it's a no-go, it's an absolute no-go. That's why the war started. At least that's what Trump said is the reason why the war started. And then they want to even maintain control of the Strait of Hormuz. So even if the war ended at the moment with all of these agreements, the whole situation would be even worse than when the war started, because when the war started, Iran was not in control of the strait, and Iran had enriched uranium up to, I think, 60 or 70%. They were close to 90%, which it takes for nuclear weapons. So this would put Iran into an even better position, which is a big problem. And look at the United States plan, okay? So Iran must dismantle its existing nuclear capabilities. That's like Iran must commit never to pursue nuclear weapons. That's like the top thing. No uranium enrichment on Iranian territory, okay? Hand its stockpile of some 450 kilograms. Do you see the difference? Like, this is completely different, okay? And the comparison is done by Colby Badwar. So if you want to take a look at that, you can find him on Twitter, I guess. And this is a problem. This is why I believe the ceasefire isn't going to last, unfortunately. With the current conditions, I think the US and Iran will not come to an agreement, and the attacks are still happening. So if you look at financial juice, let's open that up. Let's go to trading breaking news. Let's go to market moving. Yeah, you have like Iranian's parliament speaker, ceasefire or negotiations is unreasonable. You then have Saudi Arabia's vital oil pipeline has been attacked. Okay, not a great situation. I mean, Israel attacked Lebanon right after the ceasefire. I'm doing some reading, I'm doing some research, and from my sort of perspective, this thing is not getting better. The Strait of Hormuz is still closed. Has any ship crossed the strait? No. That's why I have this position. It's a risk-off position. I think we can very easily go back to these highs, at which point I will most likely take profit. So that's a very simple game plan that I have. It's just rinse and repeat. You know, we go to the highs, we could then drop. It would be kind of the easiest trade in the world to just trade this range, which is the same thing I am looking to do for USD JPY. What happens if they settle? If they settle, then my position will get crushed for sure. If they actually settle, if the strait reopens, my position will take a loss. But hey, you know, I looked at everything. Probabilities, in my opinion, are for oil to go up. That's how I'm positioned. Ballout says Andrew Campbell from Pretty Little Liars. You got it. That's the guy. So allegedly Pakistan gave one version to Iran and a different one to the USA. Exactly. Apparently Pakistan gave a completely different version of the agreement. So they gave this to Iran and they gave this to the United States. Like, what the hell are you doing? Swissian shorts taking a beating today. Yep. The position is not doing well. It's actually pretty bad in drawdown. Part of the game, though. Maybe the Pakistan PM was long the S&P. Maybe. Can you have a look at the NZD-USD? Sure, I can. Okay. Let me just check something. I first wanted to comment on USD JPY. I took profits on the short. I banked around 0.58%. Saw a nice drop, decided to take profit. The swaps were getting pretty high, so I didn't want to stay in the position for much longer. And for me, this is just, again, rinse and repeat. We know the 160 level is crucial. We know that that level should hold. So why not just sell 160 and buy or close your trade when we have a drop? You would have made money 2 times already. You would have made money on the 19th and on the 8th of April. So it's a pretty clear strategy where you can just trade that intervention level. Same thing, by the way, you can do on Euro Swiss if you're interested. So Euro Swiss, you have the 0.9 level, pretty big round number. SMB doesn't want to see Euro Swiss go below that. So why not just look for buy setups at around 0.9? I already had a nice position there. Should have held it, but hindsight is 2020. So made some profits on that. If we go back to that level, I'll be pretty happy to buy again. NZD/USD was a request, so let's take a look at that. Going up today quite a lot. Let's see, EdgeFinder. Do I have the EdgeFinder open? No. So I need to do that. Let's take a look. NZD/USD. Bearish score, okay. We are at a trend line. So we are right here sitting at a trend line. We kind of broke out of it. I think Alan is in a short position here. Personally, I'm not willing to deploy capital on this particular trade idea, but I would be bearish as well. If I'm being honest, I'm expecting a risk off. I'm expecting an escalation, which should be net bullish for the DXY. So the DXY could easily go back to the resistance level that you had right here. That can easily happen, okay? So that's definitely something I'm considering for my decision making, but NZD/USD is not my favorite thing to sell. Yeah, not my favorite thing to sell. So I don't have a position on, but if I had to put a position, it would be a sell trade. I want to post the link to the form one more time. If you want to participate in the DNA funded giveaway, it's a 5K one-phase account. Fill out the form and you will get entered into the giveaway. Good luck. Ivan says, Marco, I'm long from 0.5750. Is that on NU? 57. Oh, okay, that's a nice level. So it looks like we have Ivan going long and we have Alan going short. Who will win? We shall find out. So congrats, Ivan. You're probably sitting at some pretty nice profit at the moment. I know you have the full explanation in the A1 Trading Discord. So after my stream ends, I'll take a look at your reasoning. If you want to get Ivan's signals, join the A1 Discord. You can use the code Marco to get 25% off. You can get my signals as well, Nick's, Chris Pulver, Alan's analysis, and Ivan's. So I highly recommend you join. It's the best Discord in the trading space, absolutely, hands down. What do I want to do? I wanted to run through the whole watch list. So covered oil, I'm in a buy position. USD JPY, I'm out of this position. So I closed it. Let's just log the thing. Next thing I have is Swiss yen, which is in drawdown. I can't win them all, so it's part of the game. My bet is we have established a price ceiling here. Okay, a price ceiling, and I believe the price won't go above that. I do have the stop loss a bit below, but I think central bankers should stop the price from going there. If UJ goes to 160, we should get a rejection. If Euro Swiss goes to 0.9, we should get a rejection. So it's a pure bet on a possible intervention from either the Bank of Japan or the SMB. It doesn't have to happen, of course. I can lose this trade. It's halfway to the stop loss now, so just part of the game. Nikkei, I'm looking for pullbacks, and then I would be pretty happy to look for buy setups. I think the EdgeFinder is bullish, if I'm not mistaken. Let's take a look. So Nikkei, very bullish bias, which is nice. We're getting the pullback. So if we can hit the 20 MA, I think that would be pretty nice to look for buy setups. I do like the Nikkei. Out of all of the stock indexes or indices, I love the Nikkei the most. The fundamental story is the best. The macro situation is the best. You have the government in Japan. The PM is dovish. The government is dovish. Tax cuts are coming or have already been applied. So you can't really get a better story. Gold. I'm looking for buy setups on gold. Thing I'm waiting for is a bullish reading on the EdgeFinder. So right now the bias is neutral. Okay, right now the bias is neutral, but once we flip bullish on the bias, I'll be pretty happy to get in on a buy position on gold. So time for the giveaway. Let me grab all of the names. Today is the 9th of April. Okay, 9th of April. Let's just scroll to all of these submissions. Okay, let's copy all of the names. Put them in the wheel. Spin. Let's see. Who will it be? Fakin. I think that's the way you pronounce it. I'm not sure. Fiakin K, congrats on being the winner. I have your contact information. So after the segment ends, I will send you an email with the code. It's going to be a 5K one-phase account. And if you guys want to get funded with DNA, here's my personal. Oh, it's actually break even now. Awesome. So I managed to put it back to break even. This is my personal DNA funded 25K account. I have 3 positions running. Which one is running well? Gold, CAD, yen, but the S&P is not doing much. That's fine. If both of these hit the take profit, I'll be pretty close to a payout. I'm planning on waiting for at least $300 in profit, and then I'll try to request a payout. So we shall see. Again, I've had a great experience so far. There's a big broker behind this prop firm. They're using TradeLocker, which is, in my opinion, the best software when it comes to prop firms. So I highly recommend them. And with the code A1Live, you can get 25% off any DNA funded challenge. So A1Live, 25% off any DNA funded challenge. Definitely take a look. Use the code. Comments. Time for the comments. Tomorrow the Strait will be open. I disagree. Can't win every trade. Exactly. Prime Minister giving 2 different versions to 2 countries at war. Pretty crazy. After the meeting tomorrow, I'm a DXY bear. Word to ball. Word to ball out. I don't know about the DXY. I'm unsure. I don't have a clear bias. If I had to put a position on, it would be bullish dollar, if I'm being honest, for us to go back to the resistance level, because I'm betting on risk off. I'm betting that this ceasefire doesn't last. Looking at actual data, actual facts, this doesn't work. This doesn't work, okay? Like, Iran wants control of the Strait and they want to develop a bomb. Like, what are we talking about here? Not gonna work. So they need to change something. Maybe the US folds completely. That's an option. There are 3 options, okay? 3 options. First option, Iran wins everything. Iran maintains control of the Strait and they develop a nuclear bomb. And then something goes kaboom. Second option, there are negotiations. Iran completely forgets the nuclear program, gives the uranium to the US, and maintains control of the Strait. Third option, the US is buying time. By the way, the US is still sending troops into the area, so the US may be buying time, 2 weeks to get more troops into the area, and then they launch another strike, or they launch a land-based invasion. That's your 3 options, okay? And I don't think the US is gonna just let them accept to have nuclear weapons, or just tell them to have nuclear weapons. I don't think that's gonna happen. But DXY, again, I'm not a political expert. I'm just a guy on the internet who doesn't know much. Okay, I just know the basics. And I put a little bit of money behind my convictions. DXY, not sure. It's pretty flat at the moment. Again, the people that I'm watching, the people that I'm following, they are mostly flat on the dollar as well. Yeah, so we shall see what happens. Aussie Swiss. Let's see some more comments. I'm in gold. Pound Aussie, AUD, NZD. It was after as Trump announced the ceasefire. Germany's Chancellor Merz, Germany will back Hormuz Sea mission if mandated. I'm not sure. I'm not sure what you guys are talking about in the comments. Anyway. So Cycling Club says, Marco always gives information that's fascinating. He is different from other guests because he says things you probably didn't know or have to think twice about. Well, thank you very much. What I do is I try to read a lot from Brent Donnelly. I can actually give you all of the guys that I read currently. So it's going to be, first it's going to be Nick, okay? Then it's going to be Brent Donnelly. Then you have Andrew Campbell, the guy from Pretty Little Liars. And then you have Vukovic. You can find all of these guys on Twitter, okay? All of them are on Twitter. Just do a bit of digging. Still have 7 minutes left until Alan joins in. So we can do some requests. AUD, NZD, Euro, NZD. You guys really seem to like NZD. Okay, that's fine. That's fine. We can do Aussie NZD. Although I haven't done much work on those, so I'm not gonna be the most qualified trader on that front. I mean, AUD, NZD just looks super bullish. AUD, NZD. Yeah, AUD, NZD, very bullish even on the EdgeFinder. If I was going to place a position on this one, and I'm not, it would be definitely a buy position. We have been holding the 20 MA. This looks perfect. Why does it look so good? Is there any resistance up above? No. We actually have a lot of room to go up. It's fine. That's pretty nice, actually. So, not a bad play. I don't know why I didn't look at this thing earlier. I'm just unsure of the fundamentals behind it. I know we had the RBNZ meeting, which was yesterday. I'm not sure if they're hawkish or dovish. Should have done some work, but I'm pretty busy at the moment with the war and stuff. So I'm focusing my research on the war. I'm not really paying a lot of attention to events such as this one. So I should catch up on those events. Looks like it was, well, yesterday we got a sell-off, so looks like it was a hawkish meeting from the RBNZ. If we got a sell-off, it must have been at least a little bit hawkish, and I'm expecting that for sure. You know, you have to think about it. The only central bank that was hawkish before the war was the RBA, or the Australian Central Bank. And then the war started, and then you had a major repricing. Most of the other central banks, like the Bank of England, ECB, RBNZ, BOJ, most of them had to turn more hawkish than they were before. So some repricing was needed. That's what you can maybe see here. So the RBNZ repricing. Although I would say the uptrend is still intact. And if I was going to do something, it would definitely be on the buy side and not on the sell side. I saw the Nikkei as a request. In just a second, I'm going to go grab a glass of water. I'll be back in a sec. Okay. Oatmain says, Marco, RBNZ was a little hawkish yesterday. Well, that's great. Thank you very much for the heads up. Seems like they were, according to the pricing. I did see a request for the Nikkei. Nikkei, just to repeat myself, best indice at the moment. Absolutely, hands down, the best index at the moment. If you just do a quick comparison, so let's go to the plus button. Let's add the S&P. Let's add the DAX. So the Nikkei is beating the S&P. The Nikkei is beating the DAX. Not just beating, but absolutely destroying. So you have general outperformance. Second thing that you have is the new Japanese government is super dovish. They want to push this thing up. They want to help Japanese companies. They want to expand Japanese growth. And third thing, which many of traders are ignoring, the carry trade is unwinding. Okay. Is oil going up? Yeah, it is. Okay. Well, that's fine. The carry trade is unwinding. What does that mean? That means that the Bank of Japan is raising rates while the Fed was supposed to cut rates. Essentially, your profit margins are getting tighter and tighter for the carry trade. Now, in order to exit the carry trade, you need to buy the yen. Yeah, you need to sell dollars, buy the yen. Is that correct? Let me see. I get confused sometimes. So, carry trade, we should get this happen. Yeah, you have to sell dollars, buy the yen. Capital should fly back into Japan. So that's another bullish scenario for the Nikkei. And the fourth confluence is your EdgeFinder, which is very bullish. See? Very bullish. That's amazing. Amazing to see. That's why I like this trade so much. The 20 MA is starting to catch up. I'll be pretty happy to get in on a pullback. That's my game plan on it. Isn't an intervention by BOJ bearish to the Nikkei? Yes, it is. You are correct. You're absolutely correct. We can actually check that. If we go to July of 2024, that was when the last intervention happened. Look at this. Definitely bearish. But you never know when the intervention happens. It can happen in 2 weeks or it can happen in 2 years. USD JPY can stay at this level for a really, really long time. It doesn't have to go to 162, 163. It can just stay at this level. It can even sell off a bit. So you never know when the intervention is coming. And as a trader, I don't want to have my hands tied. So I want to play the Nikkei. Okay. I want to play the Nikkei. If I get taken out, that's fine. You know, the probabilities are there. The trade is high probability. I'm looking to sell JPY, long Euro Yen, Swiss Yen. I'm not buying this BOJ intervention just yet. Okay, that's totally fine. For me personally, I love playing UJ for just a possible. Did we get something as far as the news go? Because I see oil is moving up a bit. Let's see, Forex. Nah. Germany's Chancellor Merz, Germany will back Hormuz Sea mission if mandated. Not sure what this means exactly. So what I wanted to say, you don't even need an intervention. You can just get some traders being scared of the BOJ. So essentially they sell. Oh, we have Alan. Hello, Alan. What's up?
Hey man, how you doing? How's your day been?
I'm doing pretty well. Have you been in the room for a long time, or because I didn't have this window open?
No, well, not the longest. I did go ahead and go refill my water bottle, so I just got back from that one. But
okay,
no,
awesome.
no, haven't been here long at all.
Awesome. Yeah, so we changed up the schedule a bit. So in this case, I was starting and you're joining me. But how are you doing? Any positions? Any new developments?
Yes. So we did see
cool.
some morning or stuff out of the US this morning, not looking too good there. So you did have jobless claims, GDP right here. So you can see that it was a miss on all fronts essentially. So not the best. And then actually the top subs page actually updated against my favor there. So we are seeing those USD pairs, that bullish reading in the US dollar starting to fall off even more here a little bit. Kiwi dollar still a little bit bearish, but still not looking the best. And so if you look at the Eco Surprise Index there, USD is now starting to taper off a little bit. So might be looking to get out of my positions if I can. We'll see. It's still very strong compared to the other ones, or not very strong, but relatively above there. It's taking that second spot. But yeah, the overall the picture of the U.S. is not looking as strong as it once was.
Yeah, things have changed a bit. I know I took my oil position, then I was writing up a signal for the A1 Discord, and by the time I wrote up the signal, I opened up the EdgeFinder to take a screenshot, and the bullish reading on oil was gone. So, so I couldn't put a screenshot there. But for all of you in the A1 Discord, just know it was bullish when I took the position, and then obviously some news came out, and sort of the bias flipped. I can even show you.
It seems like it was the right call. Oil is popping off today, 4% on the day. So seems like nonetheless was a good call.
I do think so. And if I go to top setups history and I go to US oil, you can see that it was pretty much bullish for the whole week. But what I wanted to show you, Alan, is this. So this is what the US got as the ceasefire plan, and this is what Iran got as the ceasefire plan.
Oh, awesome.
And I want to get your opinion on it. So just focus on Iran's side. We know the US side, but just focus on Iran. Iran maintains control of the Strait of Hormuz, so they keep on charging $2 million per ship, or I think $1 extra per barrel, and then acceptance of Iran's right to nuclear enrichment. Like, isn't that crazy? I mean, those two demands.
I thought that was a no-go.
Well, from my sources, it seems that Iran is thinking that they can not just keep developing the bomb, but also they can now charge a toll on the strait. So essentially, the situation would be even worse than when the war started. And I think that's why we had all of this back and forth on financial juice, and why we had the attacks still going on, and why no ships have passed essentially from the ceasefire. You had maybe few ships pass, but I saw one of them had to turn back because their access got denied. Doesn't look well in my opinion. So I decided to re-enter my oil long. I think the market's overreacted a bit. I think the oil sell-off was exaggerated. I think stocks went up too much. So I'm betting oil goes maybe back to previous levels, maybe back to 108, something like that. I'll be pretty happy to take some profit off if we reach near these highs. But I wanted to get your take on the situation.
Yeah, well, after hearing that, I know that for one, something we really wanted was control of the strait, or not control of the strait, but for it to be open again. And the second one is no uranium. So the fact that they are requesting that's a hard ask on their side. Doesn't seem like it aligns really with what we're trying to achieve as well. So that can definitely make it hard to negotiate and come to a deal, especially if they're asking for something outrageous. I could see why now you're seeing oil still up. One thing though that's still kind of problematic is we did get a big drop in oil during the initial move, but it was still elevated. It's not like it got back down to 64 or 66 or whatever. We're still playing around in this like elevated playground there. So the longer that continues, the effects start to show on the economies of the world, and so that's kind of my thought process there. So yeah, like you said, it could be over exaggerated, the first initial move, and we both know that these moves don't just move in a straight line down. So it's very acceptable to see some kind of a pullback, whether it be a pullback or whether it be just a pullback in the broader upward trend.
Correct, absolutely. And I think we have to forget 60, 70. That's just not going to happen. Like, a lot of the infrastructure has been destroyed, and two people shaking hands, like from US and Iran, it doesn't mean all of the oil refineries get repaired immediately. Apparently, it takes at least 1 to 2 to 3 years to repair them, which means a part of the supply is going to be offline for the next few years. So I think we just need to forget. We need to forget going back to 70, or I would say 80 would be optimistic. Maybe if we go back to this sort of low around 85, that could be a fair level, especially if every ship that passes has to pay $2 million to Iran, or $1 per barrel extra. That just, they're going to offload the cost to the end consumer. Like the big companies are not going to cover the extra cost. They're just going to offload it to the end consumer, which means inflation up, which means all sorts of problems. Yeah, unfortunately, still not a good situation in my opinion. So that's how I'm positioned.
And as you were saying that, I was checking the rate probabilities to kind of see. And it seems like markets are now, as of yesterday, or yesterday morning at least, there was about 35% chance that there was going to be a rate cut in December of 2026. Looking at that same deadline there, 2026 of December, it is now 25%. And they keep getting pushed back now. So we're now back at the next one being, all the way into the end of 2027. So those probabilities are shifting there. That's kind of one of the tools that I use as far as getting a compass and getting a gauge as to like how the market's feeling, like whether they're bracing for worse or for better. CME rate, Fed funds futures, and it updates in real time. So that's awesome. So yeah, it seems like we're kind of back in that area where it's you were getting some good news and now you're back into the like uncertain camp where you're trying to figure out really what it is. And even that alone, right, is still tricky to navigate, and markets don't like that at all. So I'm looking at the stock market and I'm saying, we broke above that 200-day moving average and the 50-day, which was something that I kind of wanted to see as far as bullishness goes. But I think the real test would be if we can somehow find our way back into testing the level and then seeing if it actually holds. Because until then, this could very well be a fake out into the broader, downtrend there. But yeah, hopefully we can see some kind of a resolution or something. Because if this level holds, that 200-day holds, and this is just a fake out, I think that makes the situation, it looks a lot worse than what it is.
And did you get in USD CAD?
I did, man. I did. And,
Okay,
with the actual US data that we saw today, so the GDP, all that stuff, the US heat map didn't look too good there. So I'm kind of questioning now whether I have the stop loss in place. So it'll either take me out there or I can also manually close it. But also too with a potential re-escalation or with just oil being elevated there. I'm curious to see if that starts to take over again, and it starts to see the U.S. dollar act as a safe haven, and in that case, that will help my trade. So for now, what it seems like I'm just gonna do is, I have the stop loss in place. That's what I already accepted. So if it fails that level, we'll go ahead and see what happens. But it seems like we are going to go ahead and test that 200-day moving average here. Let me go ahead and delete this alert.
What's interesting is going up, but stocks are holding. So that's a bit of a different environment than we had before. And in that environment, I believe the correlations there. So if oil is going up and if stocks are holding, the DXY tends to be negative. So the DXY tends to sell off. That seems to be the correlation from some of the research that I did. It's a bit weird. You would expect oil to go up, but stocks to sell off, because we go to risk off and because people start understanding that this ceasefire is not really the thing that people were expecting it to be. It was supposed to be binary. It was supposed to be ceasefire or escalation. What we got was a ceasefire with no clear conditions, with like everyone being confused as to what each side is willing to give up or willing to accept. Weird, and
Exactly.
trade as well.
Exactly. And kind of interesting too that we're seeing the stock market somewhat flat by this elevated relative price here, given that we had a miss in jobless claims and a miss in GDP. So yeah, very interesting in my part. Again, that 200-day moving average will be that line in the sand, whether it's like, all right, this is a relatively strong market here. We don't really care what's going on about the price of oil, or we can, surpass that, or this was just one big fake out.
Yeah. I mean, if you look at 2022, I think it was. So if I put, or no, it wasn't 2022. It was actually 2025. And let me just flip this to the 200 EMA. So yeah, we got a pretty similar thing in the tariff season of 2025. We got
Oh,
a
yeah,
massive
yeah.
sell-off. We went back above the 200. Quickly after that, we dropped massively. We dropped a lot more. So looking at just this case, we would expect for the price to drop, but again, it's just one data point. Definitely not enough data to make any sort of conclusions, but interesting nonetheless. We're gonna have to look at 2022. I think we had a big drop in 2022 as well. Yeah, I mean, similar thing. So 2022 in January, drop back above the 200, and then we drop once again. I think now is a crucial time for the S&P. Either we hold and maybe go up. For that to happen, I think we would need a clear ceasefire and Iran clearly saying, look, we're not going to do anything with nuclear weapons. We're going to stay away from that. We're just going to keep on collecting the fee from the Strait of Hormuz. That could be a good development. But as it stands, I think the path of least resistance is more to the downside. So,
It's really tricky, man. And I have to be honest with myself. Like I am right now at this point neutral. So I don't have any like definitive, very hard biases that I could really, I would say trade on and put some size behind as well. So like moving forward until now, everything will be just very, very small in size, just like not the most strong conviction, I would say. It's really, really tricky. And so I just got to be honest with you, Marco, in the chat as well. Like that's kind of my stance here is like things can go either way. To your point, like I think markets were wanting something binary, something like black and white, either one or the other. And it seems like we got like a mixture of everything. So yeah, I kind of would ask you, is there something here that you're looking to trade on? Any setups that you've maybe taken in the past 2 days or anything like that?
Only the oil position. So I've closed some trades. I'm trying to be as flat as I can because I'm with you. There's too much uncertainty, and flat is a position. I'm trying to preserve capital. I'm trying to preserve some of the profits I made in the last couple of weeks. So if I'm going to take anything, it's going to be low risk, maybe 0.5% per position, something like that. My oil position is just 0.5% on most of my accounts. So I'm not looking for any home runs. I'm just looking to stay positioned for risk off. And Swiss yen is in drawdown, so that is not working quite well. But I do plan on holding it for now. What I would probably take is I would probably try to take a stab at the Nikkei if we get a bit of a pullback to the 20 EMA, let's say. So the Nikkei would be something I would like to put some capital in. But then again, would I wait for a bit more clarity with the US and Iran situation? I would. So yeah, I think being flat right now is not a bad way to go. And that's about it from me. I want to wish you good luck with the rest of the stream, Alan. And I think we're going to talk tomorrow. I think we do have a joint segment. If you guys are interested for a DNA funded challenge, I just want to remind you, the code A1Live gets you 25% off. So you can catch us both tomorrow. Thank you, Alan, for the joint segment, and see you. Yeah,
man. If you could send me that the 10 points about the agreements,
absolutely.
That'd be very interesting to read. But thank you, Marco. We'll see you tomorrow.
Yeah, sure. I'll send it to you, and see you tomorrow. Goodbye.
All right, man. Bye-bye. So yeah, guys, pretty neutral actually. And yesterday was a little bit different, right? So yesterday, I have actually two trades that I'm looking to offload here, which is Kiwi dollar short and dollar CAD long. A couple reasons for it. For one, I wanted to go ahead and fade this move here. From a contrarian perspective, like, usually these moves don't go ahead and just shoot up high in a straight line, and there's usually some kind of mean reversion type situation. Another reason for the trade, which was the main reason here, is that, for this one in particular, Kiwi dollar was very consistently bearish on the EdgeFinder. It's still getting a bearish reading, but not the strongest anymore. So that was something that I really liked, and then the technicals lined up as well. You have that level of resistance, that 200-day moving average there. So good trade there. However, The beauty about having a tool like the EdgeFinder is that you can actually see the strength start to shift in real time. And so today we did get a miss in GDP growth, services PMIs earlier in the week. The bigger component when it comes to growth in the US went ahead and missed. We're still above 54 or 50, so that's still good. But nonetheless, a miss there. And then you look at the jobless claims, all that good stuff we missed there. So the strength in the US is actually starting to taper off a little bit there. So thankful for the EdgeFinder for catching that. That way I can actually start to see and look at this chart and be like, okay, let me try to offload this trade because it seems like we may potentially start to shift in the other direction. So that's kind of the situation with Kiwi dollar. Dollar CAD as well, similar situation. Very, very strong uptrend here. Got in on a pullback here. We're testing that 200-day moving average. So we'll see if that holds. And if not, then I just go ahead and get stopped out. But that's the name of the game there. Really, really hard to navigate, though, because I think Marco worded it pretty well. Markets, and myself included, we're kind of looking for a binary black and white type situation. Like, is it going to be de-escalation or escalation? Like, we just kind of want to know which one it is. And then you can trade that, right? But now it's kind of like de-escalation, but then we might escalate, and then there's like, whatever. It's just harder to navigate. So my idea right here, guys, is I'm going to try to go ahead and take some risk off the table, whether it be I get stopped out or I just take my positions off manually. And the reason why is I want to be cash ready and I want to be prepared for a time when we are ready and we are seeing the markets clearly. I think those are the best opportunities. So I don't mind being, sitting on cash for a little bit, staying flat. You can see the market from a nice clean lens, I would say. So that's kind of my thought process there. But ideally, if you get some kind of an escalation or something like that, then the trades will work as the dollar gets that safe haven flow. But for now, it seems like it's not working out too well, and I just kind of want to. I just want to be flat a little bit. So kind of my thought process there, not looking to take any new trades. So just because I can't see the market that clearly right now. So not looking anything. Again, it's all contingent on, whether we're risk on or risk off, honestly. Let's go ahead and look at the chat here. Again, if you guys have any questions or any charts that you guys want me to go over, feel free to send them my way. I'll go ahead and, address those for you. Better neutral than getting swept by a tweet. Absolutely. Can you please look at Aussie Swissy? Currently, I'm long since last week. Lost some steam after the first ceasefire. Okay, let's go ahead and look at Aussie Swissy here. Looks like a strong trade, man. I know this was one of the trades that I wanted to take when we were initially like super, super strong Aussie dollar. If you guys remember like maybe 3-4 weeks ago, the Aussie basket as a whole was on top of the top setters page, getting a very bullish reading. And Aussie Swiss was actually a trade that I wanted to go ahead and take. So this looks like a very strong trade, man. So I don't know where you got filled at. That's obviously very, that matters a lot there. But if you got somewhere around here by these 50-day moving average, then I think that's a good trade. Alan, feels like the market eager for de-escalation, even just a weak ceasefire agreement caused more bullishness. Yeah, I think the market and the world in general desperately wants a de-escalation, and I think like any hint of that would really go ahead and put some fuel on that risk on trade. But it seems like we just keep getting disappointed, and again, just like no clear answer. Sluggy, what am I doing with US dollar? Great question. I'm currently long US dollar, so I'm pretty much filled, trying to kind of catch a bounce here in the DXY. We did go ahead and tag that 200-day and the 50-day moving average. However, the fundamentals this morning did go ahead and weaken for the US dollar, so there's a chance that this thing starts to roll over. But there's kind of two things, right? If you get a de-escalation, continued, in that direction, good chance that dollar index just rolls over entirely. And then 98 handle would be my next level of support. And then if you get a re-escalation or anything like that, then obviously this trade's higher. But right now, I'm kind of stuck here where I don't want to be. Ideally, I was kind of waiting for a kind of a escalation / like rebound in the dollar. The fundamentals were good. This was a good level here for me, but dollar right now is kind of tricky. It's kind of too early. maybe in like 3-4 days after we get more price action, I can kind of give you a better answer there. But dollar is really neutral at the moment, especially given that we we just missed some data points, some big ones here in the morning. S&B doing strange things in CHF, risk off weak CHF. I don't know if they had an intervention chatter. If someone can confirm that in the chat for me, please. I know that was something that they were willing to do before the war started, like the weekend of. They did go ahead and say that they're willing to intervene in the Swiss franc because it's getting too strong and they don't want that. So maybe they went ahead and did some verbal intervention or hinting at something. If I look at today's currency strength chart here, Swiss franc is kind of elevated there. So don't know what happened there. Oh, really? Sluggy said they already did the intervention 2 weeks ago? Okay. Interesting. Yeah, CPI is tomorrow. We'll go ahead and see how that prints out there. So obviously a strong print should lift the dollar, and a weak one should go ahead and subdue it there. This CPI print, though, this inflation print is actually going to be quite useful. It'll give us a gauge as to, the elevated price of oil, how it's affecting the market. So I think that's definitely going to be market moving. So I'm excited for that one. Is New Zealand strengthening because of the hawkish comment from the RBNZ? Great question. Not from my understanding. In fact, actually, I'm going to rephrase that. Maybe, because I don't think Kiwi dollar had any news recently. Yeah, no, nothing recently. I didn't see them on the docket. So if I type in here RBNZ, and if I look for some hawkish comments, this was early in the morning. They weren't on upside inflation. They just weren't on upside inflation. Here it is. They hold it at 2.25 with a tightening bias. Tightening bias and earlier hike risks. They support upside. Hawkish nuance, but Kiwi caps. Okay. Seems like they had some hawkish verbiage, which is different as well. So before, when I got into this Kiwi short, one of the reasons that I got into it was a little bit of central bank divergence when it comes to their stance and how they are intending to approach the situation with the war in Iran. The Kiwi, the RBNZ, was actually very laxed. They were looking to go ahead and look through it, let it pass through, and ease rates as soon as they could. Whereas the Fed was more like, we can hold rates steady or we can hike them if needed. So seems like that went ahead and shifted for the Kiwi dollar. So that's probably why you're getting a little bit of a lift off there. It was just chatter, no evidence. Yeah, I want to actually go ahead and see if we did get an intervention with the Swiss franc, but I don't think so. Only because the price action doesn't reflect that. Kiwi dollar caught a bid because the ceasefire, and New Zealand has been the currency to take a hit due to trade being closed due to the war. Okay. Tony, that is completely true. So you use the Kiwi dollar to read sentiment. Yeah, for sure. That one's very reactive. I mean, yesterday it was the biggest winner. It was like 1.7% end of the day. Yeah. And Kiwi dollar was overstretched. Yeah, I mean, I like the trade. I mean, it's still a good trade, I would say. Like, from a technical perspective, if like that's your thing, you're now testing that 200-day moving average. I mean, we tested it yesterday and rejected it, and so we're testing it again today as well. So we'll go ahead and see how that reacts. But there's a good chance here with the weakening U.S. numbers, and perhaps now that you add in that layer of hawkish tonality from the Royal Bank of New Zealand, there's definitely a chance that this thing gets stopped out. So with this one, we'll go ahead and see how it plays out. I'm looking to trim my risk any chance I get and take that off the table. But again, the market is really hard to read right now, guys. Like I just want a clear answer as far as like, are we going to escalate or de-escalate? And then I just want to take the trade in that direction. But for now, it seems like we're kind of just back and forth, not really getting any clarity. There was a ceasefire, but then it was violated within like the first couple hours, right? So that was like a something out of the blue there. And then the ships were being redirected. It was a lot going on. So I'm just kind of looking to go ahead and stay flat. And again, it's not a bad thing. It just sucks in the moment. But whenever you do get some clarity and markets start to move, you get some really nice trends, some really nice moves, and then you'll make up for it. So I always say this, like, when it comes to swing trading and stuff like that, there's some times where you don't take many trades at all. And it kind of sucks because you want to feel involved. But when you do go ahead and see those obvious trades are out there, or those obvious like plays, it makes up for it. So that's why I like swing trading. Like, it's you can make up for it in one or two really good trades, I would say. Let's see what Othman said here. It is pretty much going long the economy that is the exporter of oil and rare minerals versus the economy that just imports all of its goods from outside after the war. One economy will be able to have a hawkish central banks while the other will be paralyzed. Perfectly said, Othman. I mean, I just learned something new about the RBNZ there, but that was essentially my stance. Was like the U.S. is a little bit more dependent than the Kiwi dollar, right? So kind of what I was playing for. Now that has been disrupted a little bit, and you're seeing some upside in the Kiwi. Also, in your opinion, Sluggy, the British pound, I don't think the BOE are in a position to hike. We'll see about that. We did have a monster run up here into this zone here, and we had a very strong wick. And this wick, if I measure this wick out here, about 87 pips to the downside there. And we closed below all of these important moving averages. So we'll see how today ends as well. Again, there's a chance that, with oil up 5% on the day, back above 100, that you get some kind of a risk on appetite, and then maybe the dollar starts to flow back in. You see yields higher. You see the same trade that we've been seeing for the past 4 weeks now. Possibility. That to me would be more of a more clear direction. But for now, like, we haven't seen any real headlines as far as like, the ceasefires off the table or something like that. I don't know. It's been very tricky. See some comments from the IMF. IMF has really been saying just prepare for the worst. This thing's worse than we think. But yeah, Iron Deputy, our delegation will head to peace talks. So like Iran saying peace talks, but then the deal or the 10 points seem to be unreasonable. So that's a little bit hard to navigate. Othman said that's exactly a view on the British pound. Yeah. Yeah, they keep pricing in hikes. Again, like it depends, right? With an economy with slow growth or really bad growth, if you add higher rates on top of that, that only makes it worse. It's not vanilla as far as like rate hikes equals good or bad. Like, it's not that easy. It has a lot of nuances to it. Yeah, it seems like you're close to a ceasefire. And so shorting dollars is kind of risky. But then you don't know, right? Maybe there's an escalation. So like, I don't know. I'm curious, right? I've kind of voiced my opinion there, but I want to get a good feel from the chat. Like, because you guys offer some really, really good insight. Everyone in the chat listening, I know some of you guys are probably at work listening in the background or whatever, but if you can get a chance, type 1 in the chat if you think there's going to be a real meaningful ceasefire de-escalation, and type 2 in the chat if you think this is a nothing burger and this is going to be a prolonged conflict. I would really like to go ahead and get your thoughts and opinions on that. ECB more likely to hike than the BOE in your opinion? All right, Leon says it's going to be 2. Okay, Joshua 2, Iffy 2. Okay, so we're getting some 2s there. Anybody in here saying 1? Anyone saying that there's going to be, okay, cycling, ceasefire? 1.5, there you go. Oxygen 5 oxygen. Let me know what that means, man. I think what that means, I think a 5 means things are going to hit the fan. Joshua 4. All right, 1 is an escalation. 1 is a meaningful escalation. And 2 is going to be, this is a nothing burger. This is going to be a prolonged conflict. you're watching over the weekend to see if JD Vance goes to Pakistan. I think he's been very involved for sure. O2 Monjay says stakes are too high globally. I definitely agree with that, man. There's definitely pressure on both sides. I think they both want to achieve that objective of like, but then they also do have to appeal their reasoning for pulling out of the war, ending it. They both have to appeal it to very two different, like, I would say, populations of sentiment. Lex is saying 2, 1. Okay. For the majority, I've seen a lot of 2s, though. I think you guys are pretty much in the camp of this is kind of a nothing burger. We're going to, maybe drift back up into, super, super high oil prices, and this will just be a prolonged conflict. And if that's the case, that is a real pressure point for the global economy. I mean, the world of people in the world have said like they are not okay with elevated inflation for an extended period of time. But yeah, man, thank you guys so much for the feedback there. It was really, really cool to see the sentiment. We got a lot of 2s though, a lot of 2s, which I'm kind of like in the spectrum. I'm kind of within that like middle to slightly in the 2 range just for now, just because we don't have any clarity. So thank you guys for that insight there as far as the sentiment. And I like to see all of the new people here in the chat. We have a lot of people. We have Eric Walding in there. We got lots of new people there. Leon. So fantastic. Thank you for the participation, guys. One thing I would say before we go ahead and wrap the show up here today is go ahead and get yourself a copy of the EdgeFinder. It is a fantastic tool. It is on sale right now at the moment. So definitely go ahead and participate with that. It will definitely be helpful in this current environment, filtering off from unnecessary losses to plays that are, worthwhile taking. This will be your compass. This will be your friend. And I promise that it will go ahead and pay itself forward. Also, to go ahead and join the Telegram channel. It is completely free rally there. Daily chart markups, you got polls, you got discounts, bonus content, all of that good stuff. And something new that we just did here is that we have a new chat in the Discord. So we have I'm going to pull this up here. New chat here for all of the members here. So even if you are not a VIP member, you can still participate. And it has been popping off, I would say. I love the interaction. I love that, lots of people are in here. So go ahead and join, chat with other traders, share your thoughts and opinions. You guys can someone said, you guys can share pictures in here. You're like, yeah, man, if you want to, throw a chart on there and get people's opinion, feel free, bounce ideas and just interact with other traders. It is a fantastic community. But, with that, I will leave you guys to it. Thank you guys and have a blessed rest of your day. And we'll see you tomorrow. Bye-bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.